What? I think you... Wait, what? Your risk? Well, increase your position. I mean, increase your size. And you can very easily make a lot of money just risking 0.5% per trade. I rarely even risk 0.5%. I'm up 120% on the year. Or maybe even more, I'm not sure. And I rarely risk more than 0.5% on my account on any trade. If you catch big moves that are multiples of your risk, you're gonna make a lot of money risking very little. That's the thing. It's all about having tight stops and big winners, and also obviously a lot of small losses. Yes, it's all about the risk reward. Like something like Can, you know, you catch a few movers like this. Let's see, what's my average on it? 22.98, so 23. 23 is my average on it, right? And my initial stop was 21.40. So let's just say $1.50 was my initial risk. 23, and now it was up. It was at 39. So how much is that? 13 bucks. So right now it's already up like 8-9 times my initial risk. That's what all trading is all about, getting these big multiples on your risk. And suddenly your 0.5% risk on your trade, suddenly you're up 5-7% of your account in that trade. And like 10 times, 7 times your initial risk on a long trade, it's not even that good. I've had trades where I made 50 times my initial risk and more on parts of my shares. That's what it's all about. No, I'm really bad at holding the winners. I override my own sell rules because I think things look too extended and I sell. And then they keep going higher. I'm kind of shooting myself in the foot in this market, in this great bull market. Allmeister 29, that's a great quote. Most new traders are eating like birds and shitting like elephants. I don't even know what it means. It just sounded funny. Took me a long time to learn cut losers quickly, but still can't let winners run. Yeah. Well, for me it was never a problem. For me, I never had the problem of cutting my losers. I never really had that problem. Yes, I've had a few times I was a bit stubborn, but I always paid dearly for that, and then I just got out of that bad habit. But letting winners run, that's the hardest thing ever. That's why you need to study. Like I keep saying this, guys. I mean, you need to spend hundreds and hundreds of hours studying big winners over many different market cycles. You know, take the time, man. Then you will realize stocks can write a 10, 20, 50-day moving average for like big moves. There's no reason to sell if a stock is, for example, above the 50-day. Educate yourself. Don't be victims, guys. Educate yourself. Know how the market operates. It's the same thing over and over. Are Airbnb and food to good setups? No. Maybe in a few days. Well, the uraniums looked good like a couple of days ago. Yeah, they're kind of grinding higher. Yeah, it looks pretty decent. LEU, sure. Yeah, it looks pretty good. What do you mean, bag holders? I don't know how you account for bag holders into setup. It's an irrelevant term. If the setup is good, it's good. If it's not, it's not. It's that simple. I'm not sure what your question is. Does it have a tight range, or does it not have a tight range? DMTK, yeah, pretty good. Now this is what I talk about. Big move, moment. Look how cleanly it trades. Look how nice it surfed the 10 and 20. Then it had a big pullback, undercut the 50-day, closed above it. Now it's building higher lows above the 50-day. Now, right now, we don't know if this is a bear flag or a bull flag, whichever way it breaks. But this is a potentially very good setup if it breaks out of this pattern. Ideally, it tightens up a little bit more. Would I bother checking out the fundamentals for DMTK? I don't need to. They're probably shit. Doesn't matter. I made a lot of money trading shit stocks, frauds, sketchy companies. Doesn't matter. Unless it's something that's legit halt risk. Now that's another thing. They're all shits. Like half of the companies I've traded this year, they're gonna be bankrupt in 3 years. Doesn't matter. Like I go through my database, like my Evernote database, look at stocks. There's so many stocks that I've traded over the years. They don't exist anymore because they gone bankrupt. Some have gotten bought out also, but most of them have gone bankrupt. There's so many of them. My criteria of alt risk, like if someone like Muddy Waters or like more of the better short selling firms come out with some, you know, like legit, not like a legit short thesis, not something like, oh, we think it's overvalued here, but something like, hey, look, we had guys out of their factory, like outside of the factory, taking pictures and filming the traffic for a month. And we think 99% of this company's revenues are faked. And by the way, it's a China company. That's what happened with Snuff, Sino-Forest. They had, you know, they had guys filming the traffic in and out of their like factory or whatever, and they realized the whole company is a fraud. And then it went down 99% in 3 days. Or 90% in 3 days and got delisted. Like if someone comes out with a real short thesis, that's called halt risk. Don't go long that stock, especially not overnight. Yeah, LK and Snuff, back in 2011.